investor? Good to see you. It's Matt from Epic Real Estate, and where we show people how to invest in real estate with an emphasis on retiring early. And we're getting started here a little bit late. Forgive me. My whole office is out with COVID, the whole office. And I am here holding this all down myself. And so anyway, better late than never. So here we are today. We're going to talk about navigating disruptive business trends for 2022, and specifically 16 advantage plays for business owners to upend the competition. So if this is your first time here, really glad that you found us. If you like what you hear, make sure you hit the subscribe button before you go. And if this is not your first time here, welcome back. And thank you for sharing this with your friends and family. I absolutely appreciate that. You're the absolute best for doing that. So thanks again. Our guest today, hedge fund manager, venture capitalist, and CPA, returns to the show, longtime favorite friend of the show, to share his annual business trends report. So please help me welcome to the show, Mr. Joel Block. Joel, welcome back to the show. There we go.
Hey, good to see you, Matt.
Likewise. You're looking good. Losing some weight?
Well, not since last time, but
not the last time. Okay, well,
maybe since last year,
it's showing good on you. So anyway, perfect. So you got your new report out, and just kind of put it here. I know you sent me some new artwork, but this is what I got for us right now. And navigating disruptive business trends for 2022, 16 advantage plays for executives to upend the competition. And so I want to talk about this as real estate investors, we are business owners, and a lot of these trends can apply to us, whether it's directly or indirectly. So I wanted to dive into those, and we probably won't get to all of them, but we'll certainly give everyone the opportunity to download the whole report and get a copy for themselves. But let me just ask you real quick, Joel, what inspires you to create this report every year?
Well, listen, Matt, listen, we know each other a long time. I spent my career in the venture capital and the hedge fund businesses. And what that means is I look forward in time. I look for deals that I can get involved with, whether they're real estate deals, whether they're companies, whether they're films, whatever it is. I look for deals that are likely to be successful. So I'm always looking forward in time. I've kind of got a knack for this sort of thing. And it's sort of what people ask me a lot of questions about. So a couple of years ago, we started putting together what we thought were the significant trends. I mean, you got to remember that, every one of us, whether we're investing in real estate or otherwise, we look forward in time, we assess the situation, we calculate the odds, and we place our bets. And you may or may not know this, but I came from the world of professional gambling. I used to be a card player, and I make calculations, and by the way, at Las Vegas, where you live, calls experts in games of skill advantage players. And I was nicknamed by Las Vegas an advantage player. And so this trend report really is about helping other people to be advantage players, to get the advantage and make advantage plays. And that's really where this all comes from.
Got it. So you kind of said that you make calculated risks. You're a gambler, right? And
I'm not a gambler, but I take calculated
former risks. Gambler that takes calculated risks. Got it. So what type of calculations are made, and what type of research goes into developing your predictions?
Well, listen, first of all, one of the most important things is that I've got some very good friends. I've been in the Wall Street business for a long time. People who are on the inside track tend to know things other people don't know. So I factor in some of the hearsay from people who I know and trust. I also take a look at the environmental situation, what things are happening in the environment, the economics, the inflation that we're dealing with right now, the way that the government is dealing with the debt and some of the other problems. I look at those kinds of things. I look at the political circumstances. I look at all these things. These things are all, to me, they're all capital. We all think of capital as money. But to me, capital is any tool that you use to move your business forward. So it could be financial capital, there could be economic capital, there could be political capital, social capital. And I look at these different kinds of capital, and I think to myself, which of these are likely to have the big impact on this? And I ask two questions predominantly all the time. One is when somebody gives me a fact, I think to myself or say out loud, SWIT. So what's the impact of that? And I think about the impact. So for example, if somebody said there's going to be inflation, so what's the impact of that? Well, that means that prices are going higher. I mean, there's a whole chain of things, and we go through this whole path. And as we go through this path, we kind of figure out where we're going to be. The second question after you've asked the impact, is who wins and who loses. So if there's inflation and if there's price increases and if these different things happen, who would be the winners and who would be the losers? And so we sort of take a very methodical approach about thinking about the future. And we encourage companies to do that. We encourage real estate investors to do that. We encourage all sorts of people to do that. And it's a lot easier to look at the future and do that. And that's what advantage players do. Advantage players look at the future. They're smart about it. And they have a way of looking at it that other people just don't.
Got it. So you've got 16 real trends that you're looking at here. And we'll give everyone the opportunity to go ahead and download the full report for themselves. But I just kind of picked out 3 that I thought were really interesting. And I thought I could just kind of touch on those. And then you could go ahead and elaborate. Okay.
Sure.
So this is something really interesting. And I pulled this out because I see this somewhat in social media comments all the time when we're talking about a real estate bubble or, you know, a housing bubble. And that old expression, it inevitably always shows up. You know, what goes up must come down. And I don't know if this is exactly what you're referring to real estate, but I was always thinking like, no, it actually doesn't. And I noticed this is trend number 5. What goes up does not always come down. So what do you mean by that?
Well, you know, listen, we're dealing with significant inflation. The government has failed to really acknowledge the damage or the level of the inflation that we're dealing with right now. The Fed is just barely starting to acknowledge it. They acknowledged it a couple weeks ago with with basically stopping their stimulus program, and also they acknowledged it because they're going to start increasing the rates slowly over time. They don't want to do it a lot because they don't want to shock the economy. But what that means is, number one, is there's been this whole thing that inflation has been temporary. It's a transitory effect. Well, transitory, I never believed it was transitory. Maybe at first we all kind of thought there was a little ripple, but you know, there's this blame on the supply chain, there's blame on all this other stuff. But when people can't get labor and there's all these 20 different things have changed in our economy all at one time, it's possible that some of the prices are going to go back down. When the shipping prices come down, shipping will come back, and certain other kinds of supply chain issues. But what doesn't come back down, and we're not talking about real estate, Matt, although everything affects real estate, and we'll get to real estate second, but what doesn't come back down is labor. When you offer somebody $20 to make a hamburger at In-N-Out or whatever the hamburger place is, you can't go back to them in 6 months and say, okay, look, the inflation's over now, so we're going to bring you back down to $10 or some other rate. Inflation that affects labor never, ever corrects itself. So the price basis that a lot of companies are dealing with is distorted permanently. It is just completely out of whack now. And that's just something we're going to have to get used to and we're going to have to deal with. So inflation affects certain kinds of prices. And even if certain things come back down, there are prices like labor that will not come back down. So what's the impact on real estate? Let's think through that for a second. Well, some people might have a little bit more money to pay a little bit better rent for their apartments and other things. Some of the workforce may be a little bit better off. You know, I don't think that a $4 or $5 increase makes all that much difference, but maybe it does for some people. But for landlords, and there's some good news, is that real estate prices are going to start trending upward because when there's inflation, people don't want to leave. Wealthier people don't want to leave their cash sitting in cash. They want to put it into assets that increase in value with inflation. As rents go higher, real estate prices go higher, unless those things are financed by debt. And then you might have, because debt prices might go higher, although the interest rates that the Fed is contemplating going up are the short-term rates, not the long-term rates. Real estate prices still should go a little bit up, and that could be good for all of us real estate investors.
For sure. And I actually see them going up pretty much indefinitely at this point. I mean, kind of the interest rate I think is what could really impact the housing price. But when it comes down to it, just the very basics of economics, supply and demand, we got more people than we got houses.
We got more people coming and more are coming. So,
yep.
You know, listen, we have to look at the housing market. We have to look at the multifamily market. There's and the industrial and commercial markets. I mean, all three have different behaviors. Mm-hmm. But certainly the housing market, the single family housing market, very, very strong going forward, unless interest rates go higher, because those prices are largely a function of the payment
The
that
payment,
people
right?
are going to make. And if interest rates start going higher, that could bring things down a little bit.
Right. It might bring the overall price of the property down, but essentially the payment's going to be the same.
Exactly.
Right.
Right.
Super. Trend number 13, buzzword of the year, democratization. So what does that mean?
Well, I don't know how, if
Fitting
you
for
hear
January
people,
6th, right?
hey, look, coincidentally, when you talk about that, the democracy in the United States, the whole thing, I'm not so much talking, this is not a political phrase.
Right.
This is really about democratization is kind of a theory. It's kind of a concept that people are going to have more access, open, broader access, and everybody's going to be able to do things. The internet has democratized access to information. It's sort of a buzzword. It's been thrown around for a long time. Crowdfunding is going to make access to capital markets better. It's going to make access to deals better for all kinds of people. These promises tend to be a little hollow. And I'm not such a cynical person. I'm really a rather optimistic person, but I just want to be realistic in some of these things. When you talk about certain types of technologies democratizing things, there's always a hidden agenda. And I just want to caution readers who are looking at the world to understand what the hidden agenda is, because if you understand the hidden agenda, then you're going to make better decisions. And as you're starting to make your calculations, like we make a lot of calculations, you're going to probably be more accurate. So here's the bottom line is that, Matt, you and I talk a lot about cryptocurrency, and I imagine we'll be talking about that here momentarily.
Mhm.
But, everybody says that cryptocurrency is going to democratize finance and decentralized finance is going to democratize things and give more people more access. If you think back to what happened in the 1990s when the internet first came on, one of the first industries that blew up were the travel agents. They were the people who, they used to get paid 10% for making an airline reservation or whatever. They'd call the airline for you. They'd take care of it because it was that's how it was back in the 90s and before. Well, as soon as the internet came on and everything became self-service, we were democratizing things. And so we immediately blew up the travel agents and we thought, well, no more need for these intermediaries. Well, that in fact is not true. What was true is that companies like Orbitz and Expedia, they became the intermediaries. They became the travel agents who then demanded fees for connections to the airlines and the different places. So they actually inserted themselves. So I like to think of democratization. It's not about, disintermediation, getting rid of the middleman. It's really more about reintermediation, blowing up one middleman and reinserting another middleman instead. And when you think about it like that, that's a totally different way of positioning the situation. But democratization, it's aspirational. It's a terrific goal. It doesn't tend to work exactly how people say, because you're not really giving the reins to the people. You're really giving the reins to some other company who's got a hidden agenda of inserting themselves as the new replacement intermediary. And that by itself is pretty significant. So if you pay attention and you understand the hidden agenda, you're not likely to be fooled by it when you hear it.
Right. So I mean, maybe you touched on it, but so what's the impact of democratization for things that aren't democratized yet, or what do you see happening next?
Well, what I'm saying is that it's sort of a shroud for it. Gets people to let their guard down so that we can pass, new ideas on people that would otherwise probably push back. So if there's an idea that somebody wants, like let's say cryptocurrency. Well, hey, it's a great idea. I personally am very bullish on it, as I know you are. But let's say people who are not well understanding of it, there are other people who would say, hey, listen, it democratizes access to finance and it's going to be a really good thing. And so people let their guard down and say, okay, maybe it's a good thing. I just want people to know that although that I believe is a good thing, we are not going to eliminate intermediaries. We're just going to shuffle the deck and get different intermediaries in this process. So it's sort of a way that people, it's sort of a manipulative phrase, and then it gets people to behave in the way that some people would like to see us behave, and so they can get their way.
Got it. Okay, so we're talking to Mr. Joel Block today, and his annual report. He comes here once a year to share his insights and predictions for the coming year as they pertain to business. And if you have any questions, go ahead and use the chat box, and Joel will hang out to answer those questions. I got one more trend that we're going to cover, and then we'll give you direction if you want to download this full report to view all 16 of them. you'll have the opportunity to do that. And if you like what you're hearing and you like what you're watching, go ahead and let us know, hit the like button. That lets YouTube know that this is something that somebody else like yourself might enjoy as well. Alrighty, so Joel, number one. It was the number one trend, and we kind of alluded to it already. Cryptocurrency is the future of money. Now, I've been dollar cost averaging in very small increments since 2017. I mean, like I started at just $25 a week into various opportunities inside of cryptocurrency. And here we are just 4 years later. And my cryptocurrency portfolio now, its value now exceeds my real estate portfolio. And I really didn't do anything, right? Other than just go ahead and make those little incremental investments. And I'm really shocked. I mean, I thought I was going to do that, but now that it's reality, I'm like blown away. And I'm like, I have to pinch myself sometimes. But it hasn't really become money yet, right? It's kind of speculative investments on a new technology that's going to potentially, the blockchain specifically, replacing the internet and decentralizing or democratizing the internet. And, we have these cryptocurrencies that we're going to use to pass value back and forth. But I'm curious as to what your thoughts are of why you think it is the future of money.
Well, I think you have to separate what cryptocurrency is from the machinery that makes cryptocurrency run. Most people think of cryptocurrency as Bitcoin. That's just one of 16,000 different Bitcoin, different cryptocurrencies that are out there. And each cryptocurrency is actually a little software tool that accomplishes a certain goal. I mean, there's a certain reason that each of these things are developed. They have a little business plan behind each one. It's not like stamp collecting or coin collecting where you're just speculating on some coin that's going to go higher. That's not what this is. I mean, these really are, they're software tools. And these software tools are designed to execute certain kinds of contracts. They're designed to facilitate commerce in some way, to lock down artwork and manage intangibles. There are all kinds of different reasons that people are developing these different cryptocurrencies and these tokens or these coins. So let's separate the investment, the speculative investment in the coins, which you and I are both doing, from the machinery that makes them run. If you ever moved money to someone, like in the old days, you'd send somebody a check. It would take a couple of weeks from one bank to clear a check to another bank. And if you ever saw that movie, Catch Me If You Can, the fact that it took 2 weeks is the way that the guy exploited the system and was able to, write all these bad checks and nobody could ever catch him because it took so long. And then it got faster. Now they clear checks in a day or two. Believe it or not, it still takes a day or two, and they're still doing it manually overnight. If you want to send money by wire, you go to the bank. It's a very big deal. That I got to check my account, see if the money came in. I mean, it's not that smooth. Things like Venmo and PayPal make it faster. They move the money back and forth, but there's an intermediary in between. The cryptocurrency machinery makes it possible, Matt, for you to send money to me or me to send money to you instantaneously, almost frictionless, for pennies, if not even less. And so a lot of the need for the intermediaries that we have are evaporating. The intermediaries in the finance world are getting ready to get blown up, just like the travel agents got blown up in the 90s. Now, you can imagine that there are a lot of companies who are very upset about this. The credit card companies, the Wall Street banks, the mortgage companies, the financial advisors, all these companies are pretty upset about this, and they're terribly nervous about what's about to happen. And so the SEC, who is chaired by a former Goldman guy, a Wall Street guy, has been dragging its feet on determining whether we have cryptocurrencies. Are they the same? Are they commodities like potatoes? Are they securities like stocks? We don't know. We haven't been given guidance. There's 35 bills in the United States Congress right this minute that are just sitting idle because the government's not acting on them. I mean, we need guidance in order for this to happen. Now, when the internet came on 30 years ago, we were the leading country in the world that took the bull by the horns, and we made the thing happen. And look at what happened. The 5 biggest companies on the planet are United States companies, and they have trillions and trillions of dollars of market cap. We're not doing the same thing in the crypto markets. Other countries are doing a better job of this. So what's likely to happen? My prediction in the report is that in 15 years, the United States is absolutely going to be on a cryptocurrency backbone, that It won't be Bitcoin. There'll be some other coin, but we're going to be absolutely on some type of a platform that is digital in some capacity. And that may not happen voluntarily. That may happen because we get forced into it by our trading partners who are so much further ahead than us, and we spend all of our time playing catch up. So I hope the United States catches on. I really hope that these regulators start making some rules. And for the people like on Wall Street, the Wall Street banks, the credit card companies, the way they're trying to protect themselves because they're so terribly nervous of what's about to happen, because they see the writing on the wall. I mean, this isn't some kind of a shell game. I mean, this is a real thing. What they're doing is they're making giant investments in the machinery that makes all of this stuff work. And when you just look at the behavior of the players, you know that this is real. So a lot of regular citizens who don't have access to the intel probably don't really understand what's going on. They don't really know if it's real. They don't know if it's going to become something, if it's just a lucky speculation and you made a lot of money and that's it. But I'm here to tell you that this is real. It's not going away. This is not financial advice about speculating into certain coins, but the machinery that runs cryptocurrency, it's doing trillions and trillions of transactions every day because these coins move back and forth. It's enormously more efficient than our stock markets. It's just better. It's application of great technology to our financial system. And although the government's terrified of it and they're paralyzed with fear, it's real and it isn't going away anytime soon.
You know, two applications for what I've been able to use it recently in real world applications is we were doing a rehab here in Vegas, and our contractor needed his second disbursement of the rehab funds, and I said it's going to take me a minute. I got to go down to the bank and I got to take a check, and then I got to take it over to my business account, and so I can take the business account, then I can wire it to you. And it was I said, or if you have a crypto wallet, I could get it to you today. He says he actually did. So within seconds, I was able to give him his funds just like that, rather than taking this 48, 72 hour process and me having to get up and actually leave the house.
Yeah.
So I was like, oh my God. And I went to the bank on another occasion, and they have no clue. At least the tellers that are working there have no clue. They're like, what are you talking about? I was like, you guys are done. You guys are done unless you guys get this figured out. And the second thing that I've been able to do, because my crypto portfolio has grown to such a nice size, is now I can actually borrow from it. And I can borrow from it. And I've done that to pay the down payments on 2 different house purchases. And it's instant. I just say, I would like to borrow, and they give it to me. There's no credit check. There's no intermediary that I have to talk to or no applications to fill out. I mean, it was a wire transfer that literally was in my bank account probably within 2 hours.
Yeah. You know, young people are demanding these kinds of changes. Young people don't really see themselves getting loans from banks anymore. They don't really see themselves going into banks. There's nothing really the banks do or offer that young people believe is going to be helpful to them. There's so much cynicism in our society, largely created by politicians who probably deserve it, fortified by media who just keep making these stories worse and worse and worse. So young people are very fed up with this, and they're saying, you know what, we need a better and different way to do it. We need a more fair way to do it. And they really believe in some of these technology tools where computers are the referees instead of people who have a hidden agenda. Right. So older people may have a harder time understanding this, but once you've tried how this works and you see how smooth it is, you'll recognize that there's no going back.
Right. Yeah. Once you, it's kind of like what goes up doesn't always come down, right? There's no going back.
There's no going back.
So let's kind of wrap this up. I'll throw you on the hot seat a little bit. And to make this practical and actionable for real estate investors, what are 3 things out of all 16 of your trends? What are kind of 3 things that real estate investors can do, or at least focus on, to benefit from this year's trends?
Well, number one, I think people have to pay really close attention to the inflation and the economy. I mean, the economy is changing. We've had a steadily escalating market for years, and many real estate investors don't even remember anything else. They don't know what a cycle is. They don't know what the up and the down is. We're about to go into something that's a little different than where we've been for the last 15 years. I mean, or 13 years. It's about to change, and people need to be aware of that. That's probably the first one. The second one is sort of residual from 2020 and 2021, and that is that a lot of companies went broke. A lot of companies lost their real estate space. A lot of companies had a lot of problems. And that opened the door for other people to go in and buy those companies. That door is still open. There are still companies that are losing their leases, but they're losing them for different reasons. Number one, the Omicron thing. I mean, we're back to 2020 where there's shutdowns and cancellations and all sorts of problems are starting to happen. So there's going to be some financial distress that's going to come from that. There are going to be people who are going to be in a hardship. But there's another area of hardship that bankruptcy attorneys and other people are talking about. And that is the supply chain is making it difficult for businesses to get product to sell. And if you don't have product to sell, you can't generate revenue. So there are companies that really are suffering from some of these short-term pandemic related issues. And, you need to pay attention to some of these companies because they're going to be losing leases. They're going to be losing buildings, and they're going to be having some problems that savvy real estate investors can take advantage of. So there are some real opportunistic situations that are on the horizon that people can jump into.
For sure.
The third thing comes back to the fintech or the cryptocurrency, the virtual technologies that are going to be powering our finance system going forward. Be on the lookout, probably not this year, but sometime soon for these, they were originally called ICOs or initial coin offerings. The government hasn't given a lot of guidance on how these things are going to be done, but the tokenization of real estate, in other words, if you're syndicating, which, people know me as a syndicator, that's where my background is. They know me as a fund manager and teaching other people how to set up funds and do this sort of thing. If people are really thinking about this, one of the things we're going to see in the future is that private placements the process of private placements, the mechanics are going to be a little different, where you'll still have the disclosures prepared by the attorneys, but instead of getting shares of stock, people will probably get their interests represented by tokens. And they'll be able to buy and sell those tokens, move those tokens, secure their tokens, and hold them in certain kinds of wallets and in different places. So that's something that's on the horizon. It doesn't exist exactly yet,
right?
But be on the lookout for it.
Yeah, for sure. Okay, so those are great. One, pay attention to inflation, and essentially by just owning real estate, you are, probably as hedged as you can be by holding real estate against inflation. Two, look for problems. We're all problem solvers as real estate investors. We're looking for financial distress, personal distress, and the properties themselves that are in distress. And because of what COVID continues to cause and the supply chain issues, there's going to be more and more problems. And it might be that for an actual business. It might be for the properties that business owns. But remember, all businesses are owned by people, and those people, they live in houses too. So keep your eyes open for the problems. As always, you follow the, follow the problems and the profit will follow. And then number three, the tokenization of real estate. And this is something I'm really interested in right now and doing a lot of research. And we'll be talking about it much more this year on this channel. So really appreciate you, Joe. If they wanted to get a copy of your report, what are the instructions on how to do that? I think you emailed.
You know what? If they take out their phone and they just open the texting app and they type in the number 72,000, 7 and 3 zeros, and then they put in the word trend, the system will take them right to that. I'd also tell your real estate people to go to our actually do the same thing. Open the texting app, put the number 72,000, and then put in the word asset. The word asset will send them a series of videos all about syndication, funds, raising capital, and kind of understanding the things that we're involved in and what we do. And then they become part of our world, and then they continue to get some of our feedback and some of our material.
Perfect. So text the word trend to 72,000 to get a copy of the report, and then text the word asset to get some education and information about what Joel does. Text the word asset to 72,000 as well. All righty. Well, thank you, Joe, so much. It's great talking to you again. And I guess I'll see you next year.
You know what? We'll believe me, we'll be in touch long before then. But
for sure.
Yeah, thanks
at least
as
do
always.
a midway catch up to see how we're tracking on your trends.
We'll do it for sure.
Perfect. Thanks, buddy. Appreciate you.
Yeah.
All right. So that wraps up the show. And if you found this episode valuable, who else do you know that might as well? Because there's a really good chance that you do know someone else that would. And when that name comes to mind, please share it with them. And then ask them to click the subscribe button when they get here. I'll take great care of them. All righty. God loves you, and so do I. Health, peace, blessings, and success to you. I'm Matt Theriault. Living the dream. Take care.